Financial Brokerage. I'm our life insurance sales director here. For those of you not familiar with financial brokerage, we are a national life insurance, annuity, long-term care, and disability marketing company. Work primarily with independent producers all around the country in those areas, and it's our job to make you look good out there and to give you some ideas to find new prospects and also help you after you've already got in front of them. This morning we're going to talk about more coverage, specifically more life insurance coverage with less underwriting. And you know, nobody likes going through the whole underwriting process. It's probably the least desirable part of the whole life insurance business aside from the paperwork. And I think the industry's done a good job of eliminating paperwork now with all of the online applications. But we're going to help you find some different ways you can help your clients obtain more life insurance coverage without all the hassle of additional underwriting. And we're going to do that in 3 ways. I'll get into that in just a bit, but to let everybody know what sort of sparked these ideas and where I think the industry is going. Attended a meeting with one of our top carriers a few months ago, and they had commissioned a study from an outside party looking at the life insurance industry as a whole and this company in particular. And one of the findings that they came back with was that this is really kind of a screwy business. In any other business out there, maybe you want to buy something from a store. You walk in, you purchase it, you take it to the counter, you pay for it, you walk out, and you have what you were looking for. Life insurance, well, you say you want it, you apply for it, you go through an exam in a lot of cases, and then you wait a few weeks, maybe several weeks, and then they finally give you the thing you were trying to purchase. No other business really works that way. It's really kind of strange, and we wonder why more people don't have the life insurance they need. In fact, I may be off a little bit on this, but I think at this point in our country's history, we have the least amount of insured people that we have ever had. In fact, the latest stats from LIMRA I saw show that about half the people in the United States don't have any personally owned life insurance. And of the half that do, half of those don't have nearly enough. So why is that? Well, I think underwriting is part of the problem. So we're going to help you find some ways to minimize the underwriting or at least maximize the amount of coverage we're giving our clients for the underwriting that they've already gone through. So in fact, that's the first thing I'll talk about will be what I'm calling upsales or upsell opportunities, things that carriers have built into their systems where the client's gone through underwriting already, but we're going to be able to offer them more coverage than what they originally intended to purchase. We'll also talk about ways to give your clients life insurance coverage without going through an exam, and we'll also talk about converting existing policies, and these may be policies that required or maybe did not require an exam once upon a time, but there's an opportunity for an additional sale down the road. So let's get into what I'm calling upsales. There are 4 what I would call upsale programs available out there through our carriers, and we're going to go through these one by one, but they're coming from Voya, Banner, SBLI, and then several carriers have guaranteed purchase options. Let me talk first about Voya's Life Capacity Calculator. Now, for those of you who aren't familiar with Voya, they used to be known as ING, and they are now a American-owned company. ING over in the Netherlands has no part of them anymore. But what they have done is put together this online calculator, and it's a financial underwriting calculator, really, and you can use it to help your clients discover the maximum amount of coverage they can purchase at that time of their life. Now, why is that important? Well, you know, we know companies look at physical underwriting and they look at your client's health. They also look at financial underwriting. You know, they're not going to offer a 75-year-old $5 million of coverage if the person doesn't have the need for that amount or an income to replace or an estate planning problem. They just won't. So when a person is younger, in your peak earning years, that's really where you can obtain the most coverage that you'll ever be able to get throughout your life. Later on, you probably won't be able to purchase as much. So why not at least make folks aware of that and have them take advantage of the full amount of coverage they can purchase when they can purchase it. So hopefully this link will work here. I'm going to go ahead and click on it. Here we go. So hopefully you can see this on your screen. This is what that life capacity calculator looks like. There's no passwords needed, which is fantastic. Their default setting is this 45-year-old male. And you know what? We're just going to put in some random numbers here. I'm going to show you how this works. We're going to say that this person makes 100 grand a year. We're also going to say that their taxable estate is 100 grand. Charitable giving, we'll say the person gave 10 grand. I'm not going to put in the rest of it, but let's say the person has $500,000 of coverage in force. So you can see up here with Voya's financial underwriting calculations, our client is eligible for nearly $2 million of coverage. This person has $500,000 in force. That means the insurability reserve, or the amount they would underwrite for, is nearly $1.5 million. And they've gone through the calculations here. If your client has a business, we could also add that in, and that would certainly add to the potential number there. You can put this into a presentation for your client and present it to them, and hopefully this can help you sell more coverage than what the client was originally asking for. Now, something I want to demonstrate here, this is a 45-year-old. What if we make this person 10 years older? Look what it does to the potential amount of coverage they would offer. Now our capacity is about $1.5 million. We can only apply for another $965. So if this person waits 10 years, they're not going to be able to get nearly as much coverage. And if we boost them up to age 65, now we can purchase about $500,000 of coverage only. If we make him 75, look, his capacity is 132. They're saying he has $500,000 in force. They're not going to sell him anything based on the numbers we put in here. We're going to have to find another way to justify that coverage. So just because you're healthy doesn't mean the carriers are going to allow you to purchase that coverage. So walk through this when your clients are younger and they can get the most coverage possible. If they're going to go through the underwriting, you might as well get them more coverage rather than less. All right, so that's a calculator you can use on the front end of things. Now, let's say your client has already gone through the underwriting process and they checked out pretty well. They're eligible for the amount of coverage you applied for, and their health is such that they're able to get a decent rate. Two of our life carriers here, Banner and SBLI, on their term products, have a special program they've instituted just very recently, and it's basically an upsell program. And the way this works, your client has been approved for coverage. The underwriter may or may not extend an offer for some additional coverage. You're going to receive an email, and the underwriter is going to say, hey, great news. We've approved your client at preferred rates, let's say, for $500,000, but your client has fulfilled all the requirements we need in order for us to give them maybe $750,000 or $1 million. Maybe it's $1.5 million. It's going to be different for every person, but that's going to be spelled out in an email to you as the writing agent. And then you're going to have a short period of time, depending on the carrier, it's 3 or maybe 5 days, to ask your client, hey, look, they've approved you for this much. You can get this much more. No more additional underwriting. We just have to tell them you want it. Would you like some additional coverage? Years ago, probably decades ago, carriers used to do this by offering the client a alternative or an alternate policy. They would just issue an extra one, and you could try to get that one placed upon delivery. Well, they're doing it up front here. They don't want to go to all the extra printing expense of having a separate policy. So you can ask your client ahead of time, would you like additional coverage? You've done everything that's already needed to get this. That can give your client more coverage and certainly gives you more commissions. So two carriers, if quoting is close in price, and Banner and SBLI are in the mix, I'd probably gravitate towards one of those just to have that opportunity. Now, the third way that we can give your clients some more coverage built into their policy is by adding on a rider, a guaranteed purchase option. Some carriers will call it an option to purchase additional insurance. It's really the same thing. We usually see these on permanent plans. Universal Life at younger ages. I think usually if your client is older than 40, you're not going to be able to place this rider on the policy. But if you have somebody in their 20s or 30s or children, this is perfect because it guarantees their ability to purchase more coverage at certain later dates. They don't have to prove that they're insurable, whether it's health underwriting or financial underwriting. They just have to say, I'd like more coverage, I'd like to pay the premium for it, issue me the additional policy. So carriers will do that. But you have to put this on initially. It's not a rider you can add later. It generates an additional commission for you down the road too. So why wouldn't you want to put that out there for your clients? Now, moving on to the second part of this webinar here this morning, we talk about some ways you can help your clients obtain life insurance without going through a pyramid exam. Now, there's still underwriting that goes on. They still have to answer some questions on the application. The carrier will do a prescription check, an MIB check, an MVR check, but that stuff can be done pretty quickly. The main thing here is that your client doesn't have to schedule that exam with the pyramid company and go through all the lab work and all that sort of stuff. So we'll talk about ways to get non-med term and whole life, where you might want to use an accidental death policy, and also some carriers that offer their fully underwritten products but without an exam. So this means you can get the best pricing available, and I'll make that a little more clear here shortly. But starting off with simplified issue term and non-med whole life or final expense, these products, a few of our carriers offer them. You're usually limited to a maximum face amount, $250 on the term and as much as $50,000 on the whole life or final expense end of things. Pricing is going to be a little bit higher for these sort of products compared to something that is fully underwritten. They are assuming they're going to get a few less than healthy people in the mix. Everybody gets the same rate class. You're either a non-smoker or a smoker. So the Preferred Plus marathon runner is treated the same as the couch potato who would otherwise be a Table 4 rate class. So if you have a healthy person, maybe this isn't the way to go unless they just wanted to go through underwriting really fast or they're absolutely afraid of needles. There's no table ratings put on these products. They either take your client or they don't. You'll see these things go through underwriting in less than a week very often. On the permanent side of things, some of the final expense carriers offer graded or modified death benefits. That just means the full death benefit is not paid out in the first couple of years. Most of those we see sold have level death benefits. Your client doesn't have to wait. They die a day after issue. They're covered for the full amount. They just didn't have to go through an exam, and they paid a little higher premium for that privilege. Now, let's say your clients really don't want to pay the extra money to avoid the exam, or they really need a lot more coverage than what these sort of products are going to offer. So there are 3 carriers I mentioned that have some sort of a program or a system where you can purchase products at their fully underwritten prices without going through the exam. So the first one, this is probably the most popular of the bunch. It's been around for years now. It's through Transamerica. They call it their TOP program. And it's basically available so that you can top off an existing policy. So that's a requirement. Your client, to be eligible, has to have a policy already in place with one of Transamerica's approved carriers. And almost all the carriers we use are on the list. It's pretty extensive. Any big-name insurance company you've heard of is also on the list. Now, they have to have had that policy underwritten within the last 5 years. They had to have received a standard or better rate class. This doesn't apply to table ratings. It is not intended to be a replacement program. Your client is intending to keep that original policy in force, and we're just adding some additional coverage. So you can see on the screen the face amount requirements, the age requirements. But this is a great way to get your client additional term insurance in this case without having to go through that exam. You can still offer them Preferred Plus rates, and it's going to go through underwriting much, much faster. You're going to have a very happy client when they get a policy in a week or two rather than waiting 4 to 6 weeks on average. That's what Transamerica does. Principal also has a somewhat similar program, although this doesn't require your client to have a policy already in force. This is designed for folks that we're pretty sure are going to be preferred or preferred plus with their help, and you can help determine that either with a phone call to us or our in-house underwriting team based on what you know about the client's health. We also have a online, sort of a light version of an underwriting software tool that you can utilize. But if you're pretty sure your client's in great health, no problems, why not apply with principal up to $1 million of coverage. This applies to permanent coverage as well, and you can see what they're going to evaluate there on the screen. I mentioned all those items earlier. No pyramid exam required up front. There is always a chance that when they look at all the other information that they may come back and say, yeah, you know what, we found something, we want the exam. But in most cases, these things just fly right through, and once again, just like Transamerica, you saved your client that pyramid exam and a few weeks in the underwriting process. Now, the third carrier that offers fully underwritten prices without an exam is MetLife, and this is a little bit different. This only applies to their whole life product, and not just the whole life, but the 10-pay version. So the client's got to have a little extra dollars to be able to do this. This might work well if you have a person who is looking to accumulate some cash inside of a permanent plan to use later, maybe for college funding, maybe to pay off their house, maybe for retirement planning. And that's the sort of client you want to look for this. And not only does your client miss out on that pyramid exam, but this system will also move them from a standard or a standard plus or a preferred all the way up to the preferred plus rate class. So it does a couple extra things here. And they've got this is just amazing, a 2 to 7 day underwriting cycle on these products. So think of your higher end clients that've got a little extra money to put away somewhere, and you can get them some life insurance very, very quickly, and once again collect a nice commission at the end. Now the third section, I'm sorry, I have one more item here in this section here, accidental death policies. And these are kind of interesting. First of all, they only pay if your client dies in an accident. If they die of natural causes, they have a disease, a sickness, forget about it. But the nice thing is there are no medical questions on these products. They don't advertise them as guaranteed issue, but that's pretty much what they are. You have to answer some lifestyle questions on some, but no questions about a client's health. Depending on the carrier, it's up to $250,000, maybe $500,000. You could stack these if you had several carriers and get your client $1 million or more of coverage without an exam. They cost next to nothing. You could purchase or a 55-year-old male could purchase $250,000 of coverage for the price that he would have paid at age 25 for a fully underwritten 30-year term plan. And so the pricing is just incredible. You might even target folks you know are in higher risk avocations, folks working with heavy machinery, farmers, ranchers, folks with avocations that put them at greater risk, greater than the normal population, maybe motorcycle owners, jet ski owners, anything like that. If you're in a property casualty agency, this would be a great sort of product to market to those folks. You can take the applications over the phone. As long as you're on the computer, get the client on the phone, and you've got it started, and you've got policy issued within a week. You've got your commissions paid within a week in most cases as well. So don't overlook accidental death in the right situations. All right, now the third and final part of the webinar here, conversion options. We all know what a conversion is. You take a term policy and turn it into a permanent plan at some later date. Generates a new commission, by the way. You might be catching on to the theme there. We'll talk about that in general, but there are some other sort of oddball conversions out there that most folks don't think about. Most people don't even know exist, so I'll probably spend most of the time on that. But a traditional conversion, like I just said, your client can turn a term plan into a permanent plan. They're going to be able to keep that for the rest of their life. We know term is temporary. It's for a term, a set period of time. It's going to go away. Your client does have the ability to turn that into a permanent plan with most carriers. Only downside to that is we never know what a carrier is going to make available for conversion. If you're counting on that in a specific permanent plan to be there, client just can't afford it right now, you know what, you might want to look into getting the client maybe a smaller amount of permanent coverage today, because there's no guarantee that the great UL or whole life that you really like is going to be there in 5, 10, 20 years when the client finally makes the decision to convert. But it is out there for them. Now, here's an interesting take on conversions, and this is available on return of premium term policies. I have the illustration in here from Voya, but there's a couple others that really do the same thing. So this first page is just to let you know what all the parameters that this was run on. We have a 35-year-old in great shape, $500,000. Guy's paying about $80 a month for this $500,000 of return of premium. Now, what happens at the end of the 30 years? Return of premium. Well, the person gets all their money back, right? That's all we think of. Well, there's actually a couple other options that most folks aren't aware of. And if you look at year 30, age 65 for this gentleman, a person could take their premiums, about 27 grand in this case, and that's it. That's the end of the policy. They have a couple other options. That cash surrender value could be rolled into a new permanent plan, and like I just spoke about, a person could convert to whatever permanent plan they make available at that time. That return of premium money could be used to offset premiums or lower them going forward. And the third option, and this is a really interesting one, reduced paid-up insurance. If your client says, you know what, I've done all right, plenty of retirement money, I don't need the 27 grand, I'd really like to have that $52,000 of coverage and the privilege of not paying any more premiums on it. So that's also an option for your client. You could think of this as a combination of their term insurance and permanent coverage that they'll need for the rest of their life. They've got the $500,000 for 30 years to cover the house and the income replacement needs during their working years. And then when they head into retirement, they don't want any additional expenses. They're still going to need a permanent plan to put them in the ground and handle ancillary expenses at that time. Now they have a permanent plan just over 50 grand available for them. So this is available on almost everybody's return of premium plan. Voya just happened to illustrate this very well. Now the other conversion option I want to talk about, this isn't really a conversion. I call it the non-conversion conversion, if that's confusing enough for everybody. But this is a UL through Protective Life. It's their custom choice. And you know, for those of you familiar with Protective, they don't have a true term policy. All of their term policies are actually filed as universal life, and they go for different durations, 10, 15, 20, 30 years. I think this illustration I showed running for 30 years. So we have our same person, great shape, 35-year-old, $500,000, paying almost $40 a month for $500,000. So what happens after year 30? And this is a little smaller, so hopefully you can still see that. With Protective, the client has a few options. They could pay a higher premium and convert this to a permanent length plan if they like to. They can end it, or they can continue paying that same $30, $40 a month premium they've been paying forever and ever and continue with some amount of coverage. Now, if you can see the fine print there, the amount of coverage is going to drop tremendously in year 31, but after that it's a gradual decrease over time. This could also be thought of as the permanent plan they need for all of their end-of-life needs. You can also configure this to help or try to mimic the old decreasing term that really nobody offers anymore, maybe to cover a mortgage obligation. But again, this could work as a term policy in their younger years, and this could work as their permanent plan in their older years, and it's all on exactly the same policy here. A couple other conversion options we don't always think of. Converting a child rider. Now, most of the time when we come across these opportunities, we don't really have to convert it. The kids are in good shape. They don't have any health problems, and we can go on the open market and find the best priced plan available. However, if a client doesn't want to go through all that effort, or if there are some health problems involved, you can always convert that same face amount to a permanent plan, same amount as that child rider. Usually you can convert up to 5 times that original amount. Again, one child rider on a policy covers all children of that insured. You just have to let the insurance company know the names and birth dates of those kids so they can keep track of all that. But we don't want to overlook converting a child rider. And this is an interesting option as well. From time to time, we'll have carriers that will do what is basically an external term conversion program. That means they're converting a term policy to a permanent plan, but the term policy was written through another company. And they're sort of piggybacking off of that original underwriting that was done earlier. MetLife currently offers something like this. And, of course, they have their own list of approved carriers, but most of the big names are on there. Most of the carriers we work with here at Financial Brokerage are on that list. So if you don't like the conversion option that your client's current company has, we might want to look at this MetLife option for them. They can't be older than 65. Again, we're limited to $1 million, and table-rated cases will not apply. If they're standard or better, we're okay. Other feature here is that this has to be done within 60 months, or essentially 5 years of the original policy date. If you've got a 7-year-old or a 10-year-old term policy, it won't work. But if it's been issued in the last 5 years, you can certainly do this. Some things to look for: maybe your client has a term policy with a carrier that no longer offers a no-lapse guarantee provision, and you want them to have that coverage guarantee. This is something to look at if they fit all the other parameters. If it was underwritten within the last 5 years, we can certainly do that with MetLife. And MetLife does a great job with whole life, and they have a UL as well. So those are the 3 ways we can give your clients more coverage without the hassle of additional underwriting. And we'll get to the questions here in just a second, but as you're typing those in at the bottom of the control panel on your right, I do want to thank everybody for joining us this morning and taking time out of your day. And certainly hope that some of these ideas can be utilized right away to help you help your clients expedite that whole underwriting process, maybe even eliminate it. Nobody likes underwriting the clients. All of you out there in the field, us over here, it's time-consuming, and if we can find a backdoor around that or expedite the process, that just helps everybody out there. So I'm going to get to questions here in just a second.